Welcome to the Daily Brief, where I'll go over the highlights for the action in the market for Monday, November 21st, and then we'll see how things look for Tuesday, November 22nd. Kind of a sad day in American history. If you remember back to 1963, what happened on this day in Dallas, Texas. As far as the market is concerned, we had another slightly down day. It wasn't really negative, so we're continuing to work off some of those short-term overbought conditions. But with the down day, that does have an impact on some of our indicators. So we're showing things weakening. Another thing to be aware of is volume is continuing to drop off. It's below average and falling, and that might continue. Of course, something could happen that could change all of that. But we have Wednesday's session will be a full session. And then, of course, Thursday, the markets will be closed for Thanksgiving. Friday will be open, but it will close early. So when you take all of this week together, unless something really big happens, volume may still stay low. Now, sometimes that can mean that there's not a lot of conviction behind the moves. Other times that can mean that those big hedge funds or folks that do an awful lot of trading, the huge conglomerates, they can really have an influence on prices, either up or down, because of the lower than average volume. So just something to keep in mind. So let's go back and talk about what happened. We did have a lower open with prices finding support down at S1 at 39.41. As the day went on, prices bounced back up. We came back up to the daily pivot, and that's kind of where we bounced for most of the day between S1 and the daily pivot. The daily pivot was at 39.60. Prices then drifted a little bit down, and we closed about 39.50. We were down 0.39% on below average volume, which, as I said, is declining. The technicals are still hanging in there positive overall. We still have this basic positive backdrop, but at some point the market's going to need to come alive and take advantage of that, or we might lose that. It may, or I don't know, it's kind of hard to say that it will be decided this week. If you remember back a few years ago in 2018, the low that we set before we really bounced up out of that came on Christmas Eve. That's another day when the market closes early on below average volume, and we just kept going down and down and down and down and down. Right after that, we saw a pivot by the Fed, and prices just shot up. So be aware of those kinds of things. The market is open all the time for a reason. That's so it can discount every bit of news, everything that's going on in the world, and they like to keep the markets open as much as possible. So we just need to be aware of that. Inflation and interest rates are still the biggest concern, but there's the whole list of all the other geopolitical concerns that are happening. Russia, Ukraine, haven't heard much out of Iran and Saudi Arabia. It looks like maybe that has settled down a bit. Of course, we had the recent firing of a missile from North Korea. That can cause some concerns as well. And then the midterm election, it's pretty much decided, but I understand there's still a few races out there that we're not quite sure about. And then we have the runoff in Georgia coming up in the early part of December, but that doesn't look to be as critical as in the last election. So here's the daily chart here, or the intraday chart, I should say, where we did start down below the daily pivot right at the open. We came down to S1, and even though we fell a little bit below that, S1 did act as pretty good support. And then we did recover. We came right up to the daily pivot, stopped, and then drifted lower and closed right at about the 39.50 level for the S&P. Not a real big movement in the day. The pivot points will be pretty close to each other for Tuesday's session, just because Monday's range was not very wide. So what are some comments? Now, last week I kept talking about how maybe China is going to lessen their COVID policies. Well, now they're back to freaking out about it again. So that was kind of the overhead negativity that was hanging on the markets in Monday's session. In China, they did confirm that there have been some COVID-related deaths for the first time in 6 months. And a lot of people in Beijing, their biggest city, they're being urged to stay home. For those of you that don't know, I teach English online to Chinese children. And so I'm able to hear about this pretty much every day. And a lot of the students that I have are from Beijing. And yes, their schools are closed. And sometimes they can go out, but most of the time they really want them to stay at home. The VIX was down on a down day, which is kind of strange. I've been watching the VIX closely and it's been acting weird. That one chart that I showed in the previous video, I'm not showing that chart because that actually declined a little bit, but to have the VIX down on a down day is kind of strange. The dollar was up and interest rates were kind of mixed, and that provided some headways, especially the dollar with it going back up a bit. That made it really hard for stocks to advance. And then as far as our indicators, even though I take the stochastic studies as a as a whole, I take them as a short-term chart. Well, we also have a long-term stochastics on the short-term chart, if that makes any kind of sense. Those are the only stochastics that are extreme positive currently. And then we have a few of our PMO studies. There's another chart that I use that has 3 different things that we measure. A few of those areas are still extreme positive. So we pretty much have worked off this overbought condition. We still have the same yield curves that are inverted as we've been talking about now for quite a while. Sentiment really, it didn't budge, didn't really change for a down day. It wasn't a big down day, but folks are still leaning a little bit more on a sentiment. Okay, let's try that again. A sentiment basis, they're leaning more towards positive. We didn't have any economic reports that came out, and we won't have any on Tuesday either. So that kind of doesn't really give a lot of direction or to confirm if the market's going to go higher or lower to justify buying or selling. As far as our trend, our ADX is pretty much flattening out. I do have a chart where I'll show you that. We're neutral because we're below 20. The green line is still on top, even though it's declining. So we are positive. I have our bias. It was at positive. I switched it back over to mixed just because we've had a few down days now. And I've also kept our momentum at mixed with a slightly positive bias, but we need to see follow through or we're going to lose that. Here is an updated chart as of last week for how 2006 through 2008 is copying what we're seeing in 2022. It should be the other way around, but just a little bit of an update with the white chart with the current S&P prices. And this is suggesting that we could see some real weakness going into the end of the year. So we'll have to see. Is it going to stick to this chart or are they going to deviate at some point? Here's another one that I found on Twitter. This is the VIX, and they have a 12-day shift, just showing how it's been acting kind of strange as well. And that's why I'm kind of trying to figure out a little bit more with the VIX, even though not really much happened and it was up or it was down on a down day. But we want to just keep an eye on how things are happening here. Now, this white line, this is what the VIX has been doing. Now, there's a shift in mind here right before it gets set to really spike up. Now, the VIX is high, it's time to buy, but when it's going up high, that means the market is going down. So if you take these 2 charts that we might see some weakness going into the end of the year and we're getting ready for the VIX to explode to the upside, okay, that could be pretty negative. But we want to just keep an eye on our charts. We still have this positive backdrop. We still have seasonality in our favor. We have the midterms behind us now. Let's see. There's still an awful lot of headwinds that are hitting the markets that, again, could really gyrate things to the downside if those come to the forefront. And then even something that we haven't thought about that could happen that may have at least a short-term impact on the markets. So that's why we want to be diligent with keeping up on what's going on. Here's the ADX where it's pretty much flattened out. If you look at it on another chart, it's still just a little bit above the moving average. The green line is declining, but on top. So we are still defaulting to the positive side of things, but we're not really moving right now. Here's our daily chart showing that we had kind of a small bar in here. We're still in between the 200-day moving average and the 50-day moving average. And down below, you can see where volume is really starting to trail off. This is a big holiday week for a lot of folks. And here's our moving average tree also showing where we're above the 100 moving averages, but we're below the 200 moving averages. Just to show you how the new highs, new lows, they've been holding up still. We're still going up with the 5-day, going up slightly to flat to slightly higher with the 10-day. So we're not seeing a real breakdown there. Of course, price really has been chopping sideways as our ADX has been indicating that it is. Another thing to keep in mind, summation index based on price is still positive because the McClellan oscillator is still above 0. But based on volume, which is calculated in a different way, we are seeing a decline. That's a warning sign there. So what's our outlook for Tuesday? The technicals are positive, but every time we have a down day, they are weakening a bit. Volume may remain below average. Of course, that could always change, but if you go with the pattern that seems to be happening lately, we might stay with this below average volume. If we do see a pickup in volume, it might be on Wednesday because we're getting some economic reports in that session. We don't have any coming out on Tuesday, and then all of the geopolitical events and earnings are still coming out. Inflation and interest rates are still the real fixation for the markets. So our scenarios, not going with the down scenario yet, because the technicals, they are weakening though, and they're on below average volume. So if you're more bearish on things, you might use that as justification. As far as our charts are telling us, we haven't switched to that scenario yet. We can go a bit with the up just because a lot of our indicators are still mostly positive, but at the same time, we are seeing this weakness and a real decrease in volume and not an awful lot of conviction. So we're currently going with the ADX, which is flat, moving sideways. It's below 20, but with the green line on top, it remains positive. So our conclusion, the S&P, it's weakening and volume may remain below average. Short term, it's showing some weakness, but it's still positive. It's mostly worked off that overbought or extreme positive condition. Intermediate term is also showing some weakness, but long term, we are still negative. So thank you. I hope you have a really wonderful Tuesday. I'm thinking of just continuing for right now with these daily brief videos as I deal with this ear condition that makes it really hard for me to look at the screen for very long. So anyway, have a really good Tuesday, and I'll talk to you in the next video.